Now we get to our child. These are the points you should for sure memorize, and I want you to get these 3 points on the exam. So how do we know if this child sitting right in front of you is a qualifying child? That's another thing. You could have a child and, but if they don't meet one of these pieces of criteria, then you cannot legally count them as a qualifying child on your tax return. Now, they must be relative. It must be a child, stepchild, legally adopted child, foster child, brother, sister, or a descendant of a qualifying child. You see brother, sister here. If it's a younger brother or sister, right? If you're an adult and you got a younger brother or sister who's still a kid, they can count. Residents, they must live with the taxpayer for more than half the year. We'll see. What about college kids who go to live at college? They're not excluded because of that. We'll talk about that later on. What about age? Well, the child must be under the age of 19 at the end of the tax year, or under the age of 24 if they are a full-time student. You can see how the tax law is quite catered to they want you to do here in this country is go to college. There is no age limit if the child is permanently or totally disabled. What about support? The child must not provide more than half of their own support during the year. We'll see about that. Well, if they have a job and they make a lot of money, that could exclude them from being considered. Now, citizenship must be a U.S. citizen, U.S. national, or a resident of the U.S., Canada, or Mexico. Got to share the love with those neighborly countries. Joint return, the child must not file a joint return for the year, except to claim a refund of withheld income tax or estimated tax paid. Just something to memorize. So why would they file a joint return? Well, if the child is married, it's a 23-year-old student, they're married, something like that. They must not file a joint return, except if the purpose of that was to claim a refund of, withheld income tax. So basically, not a full joint return. It was just for a specific purpose. That's just another point to memorize. Next, we've got income. There's no specific income limit for a qualifying child. However, the income might impact the support test. Now, why is that important? What's the difference? Well, if a qualifying relative makes over a certain amount of money, they cannot be considered a qualifying dependent. But for child, they can make as much money, but it has to do with half of their own support. So if the child is living on a lifestyle of $1 million of expenses for the year, and the child makes $400,000, that's still not half of their own support, and as such, they would still be considered. Lastly, tiebreaker rules. If 2 or more taxpayers can claim the child as a dependent, just classic example, you got divorced parents, the tiebreaker rules apply, so both parents want to claim the child, but only one can, because a dependent can only be a dependent on one person's return. You can't be a dependent on multiple people. You can't be a professional dependent, right? A professional couch surfer and just have people claim you for that purpose. So only one person can do it. The rules here give priority to the parent with whom the child lived the longest during the year. So if the question says that the child lived 6 months with each parent, that would be equal, right? So how do we break that? The tiebreaker here is that whoever has the highest AGI can claim the child as the dependent. And why is that? Well, because whoever has the higher income will probably benefit more from having a qualifying dependent. Example here, your 8-year-old biological daughter who lives with you, or your 15-year-old foster child who has been living with you for the entire year. Examples of qualifying children. Obviously, that didn't touch upon most of these other rules, but just simple example. We'll see many more as we go along. Examples of these qualifying children. Well, let's talk about each of these criteria examples here. The relative must be a close relative, such as a child, stepchild. We talked about all these. Definitely memorize that. Well, Sarah has a daughter named Emily and a stepson named Alex. Both Emily and Alex can be considered as qualifying children under the relative criteria here. Sarah's niece, who lived with her for most of the year, also qualifies. You see, niece, nephew, those qualify as well. What about residency? The child must live with the taxpayer more than half the year. Temporary absences, such as for school, vacation, or medical treatment, are still considered as living with the taxpayer. So whether you're at college for 9 months, you're at medical treatment for 9 months, you're on vacation for 9 months, no matter what, they are still considered, if their primary residence is with that parent or that taxpayer, you are still going to meet that criteria. So if Kevin's at college for 9 months, doesn't matter, still considered primary residence is with the father. Now, age, the child's got to be under the age of 19 at the end of the tax year, or under the age of 24 if they're a full-time student. There's no age limit if the child is permanently or totally disabled. So we've got Amy's daughter, Lucy, 20 years old and a full-time college student. She meets the age criteria because she's under 24 and a full-time student. Perfect. Looking good. What about support? The child must not provide more than half of their own support during the year. This is going to include expenses such as food, clothing, housing, education, medical and dental care, and recreation. All that support, basically every dollar that goes into that child. Well, George's 18-year-old son, Michael, has a part-time job and covers 40% of his living expenses. Since Michael does not provide more than half of his own support, he meets this support criteria. There we go. Looking good. We're going to keep rolling with this, seeing examples, and having a good time. Next up, citizenship. Well, the child's got to be a U.S. citizen, U.S. national, or a resident of the U.S., Canada, or Mexico. We've got Maria's son, Pedro, was born in Canada, but now lives with her in the U.S. He meets the citizenship criteria as a resident of the U.S. Simple as that. Next, for the joint return, the child must not file a joint return for the year except to claim a refund of withheld income tax or estimated taxes paid, basically just to get your money back from the IRS from a prior year. So Lisa's got a 19-year-old son, Jacob, who's married and files a joint return with his spouse solely to claim a refund for withheld taxes. He still meets the joint return criteria. Next, for income, there's no specific limit. Now, why do we bring this up? Is because there is a limit when it comes to the qualifying dependent, qualifying relative. However, the income could impact the support test. If the child's income contributes more than half the support, they will not qualify as dependent. Kelly's daughter, Erin, has a high-paying job. Congratulations, Erin. I'm happy for you. And contributes 70% of her living expenses. She does not meet the support criteria. So we're bringing up the support criteria again. So this income disqualifies her as a qualifying child. She'll have to file her own return, deal with that. But it doesn't matter. Like I said, she could be making $1 million. But if the total expenses for Erin are, let's say, $5 million, that's only 1/5, right? That's only 20% of their expenses. Tiebreaker rules, like we said, if you have two people trying to claim the same child as a dependent, you don't have to be divorced. Maybe it's two people filing separately for various reasons, as we talked about before. It could still be, legally married, right? But here we've got an example. After a divorce, Emma and Tom's daughter, Olivia, spends 6 months with Emma and 6 months with Tom. So equal time. If it's at 5 months and 7 months, obviously that would end there. But since Olivia lived with both parents for an equal amount of time, the parent with the highest AGI will be able to claim her as a dependent. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.